XRP Dark Pools versus OTC. I see a lot of confusion and concern that the XRP ETFs aren't going to have any impact on XRP price because all of the inflows to those ETFs are going to be done OTC, and so it's not going to hit the public order books and it's not going to lead to XRP price appreciation. We also see a lot of confusion between dark pools and the private ledgers that XRP does have that Ripple has enabled for some of their central banks and institutional partners. Now, David Schwartz has explained that at any time those partners could hit the big red button and make that walled garden come down on the private ledger and have that interoperability with the public mainnet. And so we know that that functioning capability is there. But I see a lot of people confusing the private ledger with dark pools. And so in today's video, I want to explain the difference between the two, and we want to answer the question, despite the fact that all of the XRP ETFs are going to be acquiring XRP through OTC desks, will we still see price appreciation for XRP? So if you appreciate the content that we're putting out on a daily basis, please help us out by liking our videos, sharing them out far and wide. And then if you want to support us further, all of our community resources are available at zachrector.com. Now, as this video goes live on November 24th, we're going to have two new XRP ETFs going live. I'll show you those tickers in a minute. But we have Jeff Park saying that this is the most relatively bullish chart heading into this week. We're finally done with the long leverage trying to catch the knife. Doesn't mean it can't come back, but this is a welcome reset, especially if we can confirm IBIT inflows on tomorrow's print. Remember, T+1 6 p.m. cutoff for cash. And he's talking about the BlackRock Bitcoin IBIT. And he's talking about the aggregated funding rate chart. And so we scroll down here. I want to make sure that you can actually see this chart. So I'm going to pull up the full visual here. And what you're looking at on the very bottom, where that red, where the red candles are coming in right here, that means the funding rate has gone negative. And so that means, there's basically, not much of a cost to go long Bitcoin right now. Now, this has been a key indicator that we've actually been watching for XRP. When XRP's been getting overheated, that funding rate extends up, gets overextended, and then very soon after, XRP rolls over. Now, on the flip side, and we hadn't gone negative yet for Bitcoin, if you could look back at this chart, leading up to the 18th, 19th, 20th, 21, 22, all this last week, the funding rate was still positive, meaning that the exchanges could still charge, that funding rate to charge people to go long. Now, the funding rate goes negative when everybody's scared. Everybody's been wiped out. And so as Jeff Park notes right here, this is the most relatively bullish chart that we have in all of crypto. Now, I am still very bullish on the XRP chart. When you zoom out, you get the proper context. And what you see is that XRP has been actually setting higher lows since our April tariff debacle and the $1.60 low that came in for XRP. Let's go to the chart. You see back here, $1.60 was the low that we hit in April. Now, we pulled all the way back here on October 10th to $1.81 on the, that's $1.77 on the Coinbase chart, which is what I'm looking at. Now, on the Binance chart, we did go lower. We went down to $1.25. I think at one point it even showed 77 cents, but Binance was all jacked up. The Binance chart during the 10-10 wick, that was just complete manipulation. It wasn't a real market. And so I look to this Coinbase chart because Coinbase is a regulated entity, with the CFTC. And, I just believe that what we're looking at here on this chart is a little bit more trustworthy, right? The Binance chart, that's something else, right? But when you look at the Coinbase chart, on October 10th, we set a higher low at $1.77. And then what we did the other day on November 21st is we went down to $1.81. So we've been setting higher lows from $1.60 to $1.77. And then just last week, we bottomed out at $1.81. Now, are we in the clear yet? Not ready to say that with 100% certainty. In fact, I'm getting ready to set my next buy order right above $1.60. I'm going to front run that level in case they want to do something crazy and send us back down to that level. We have a fib supported at $1.65. We know we have a lower price that we went down to $1.60. And so I'm going to look to front run that. If we get back down to that level, I'll be a buyer. But it looks like we're in the clear as XRP moved back up here to $2.11 on this Sunday as we were getting ready to start the week. And we're going to be watching closely to see how we open up here with 2 more XRP ETFs going live. Now, what's beautiful to see is just after 7 days of trading for Canary and 2 days for Bitwise, 205 million XRPs getting parked behind those 2 ETFs. Now, for the Franklin Templeton, it's the XRPZ ticker. And for Grayscale, it's the GXRP. And they are going to be live November 24th as this video goes live. Okay, now just to confirm, here's the website. I've been tracking this. Canary Capital, their holdings 146 million. We slide on over to the Bitwise and we get the update from them at 59 million XRP. That's where we get the tally of 205 million XRP parked behind these ETFs. Now, we got a note here from Chad Steingraber that I think is important to consider, and this is where the FOMO really starts to kick in. The market closed on Friday with an XRP price of about $1.90. If we could open up on Monday, above $2 or even at $2.10 or maybe even higher, that's a jump of 20 cents in the underlying asset. Now remember, these ETFs don't trade through the weekend. This is what gets so interesting about these crypto ETFs is they have to adjust on Monday morning. Consider that each share is 10 to 20 XRP. It's different per fund. That's a significant bump for the share price. A jump like that or bigger could trigger a market volume frenzy as FOMO kicks in for the ETF. This is how the ETF in time becomes an influencer of market dynamics. And they have to go buy XRP to go back these ETFs. So imagine they get all this volume and activity, right? Because there's a 20% arbitrage from where the market closed on Friday and where it's going to open up Monday. And then you get all this activity coming in. They have to go then buy that XRP to back the ETF. And then they're going to have to go buy it at a higher price that could be 20 or 30 cents higher. That's where this volatility, especially on XRP, gets interesting. Now let's get into the title of today's video, Dark Pools versus OTC. I see a lot of confusion. Also private ledger conversations as well. These are 3 separate things. Private ledger versus dark pools versus OTC. All 3 things are separate. Now, Ripple has enabled some of the institutions to transact on private ledgers. We don't have much information on this, and this is something that they created for central banks and other institutions that wanted that capability. Not a big deal. Ultimately, at the end of the day, they do have interoperability or the ability to connect to mainnet. Something that's completely different. I don't really see Ripple talking about it all that much anymore. So I really don't think there's much of a conversation to be had about private ledgers. And I definitely don't think we've even had David Schwartz acknowledge that there's not a higher price of XRP on private ledgers. That's not how this works. But we can break down the difference between dark pools and OTC desks because this is absolutely relevant. And this is how the ETFs are going to acquire their XRP. This is how they did it for Bitcoin as well too. And I'll explain why that's so important here next. So we got the difference here between dark pools and OTC. Nice breakdown by Grok right here. The primary purpose for dark pools is to execute large block trades with minimal market impact. OTC desks, it's to provide liquidity and pricing for trades, often in size, directly between 2 parties. The trades happen on an automatic trading system electronically with dark pools. And with OTC desk, you have bilateral negotiation, usually voice or chat, then settled electronically. So you have a real negotiation between people taking place on OTC desks, while dark pools, it's done electronically. Participants, it's institutions, hedge funds, high net worth clients, etc. Prime brokers, pension funds, banks, for both sides. Assets traded, almost exclusively equities, but we're starting to see some others for dark pools as well too, dark pools for crypto. But on the OTC side, it's almost anything. Stocks, bonds, derivatives, FX, crypto, options, structured products. Whereas dark pools are almost exclusively equities, and now we're starting to get some dark pools for crypto. Transparency, venue type, you got it. Examples. Yeah, so they give a few examples here. Goldman, LiquidNet, City Match, UBS. On the dark pool side, on the OTC desk, you have the Goldman Sachs OTC equity desk, JP Morgan bond desk, and the Binance OTC crypto desk. Coinbase OTC would be another example as well too. Typical use case is for dark pools. A fund wants to buy, sell 1 million shares of Apple without moving the market. That's all this is. And it's basically the same thing for OTC. A hedge fund wants a custom swap, or a client wants to buy 500,000 shares of a thinly traded stock, or an institution wants to buy corporate bonds in size. The key practical differences in everyday trading: if you're an institutional trader, you send an order to a dark pool. Your order sits in an order book and matches anonymously with contra orders electronically. If you call an OTC desk, you're talking to a human or chat with a salesperson who quotes you a price, often with the bank taking the other side or finding the other side for you. The desk makes money on the spread or by warehousing risk. In short, dark pools equal private electronic equity venues for block crossing. OTC desks equal bilateral dealing desks that can trade pretty much anything off exchange. They can overlap. Some banks route large equity orders to both their own dark pool and their OTC desk depending on client preference, but they are distinct mechanisms. Now, I asked Grok if there's any examples of dark pools for crypto, and they name Go Dark by GoQuant, recently launched in October 2025, first true institutional grade dark pool for crypto. And so this is really just now arriving on the scene for crypto as far as dark pools go. OTC desks, they've been around for quite some time. Dark pools, rather new. SFOX Dark Pool, active since 2020. Kraken Dark Pool, it was actually launched in 2015, but it was discontinued around 2016 to 2017 due to low demand. So not currently available. Renegade, it is active, focuses on DeFi privacy, ideal for whales, avoiding minor extractable value bots. And then Republic Pool, active but less prominent in 2025, early innovator in decentralized dark pools. So we do have dark pools in crypto, not as many, and we have much more activity in OTC desks for crypto. So I wanted to just start by breaking down the difference between the two. And now the question that everybody's asking: will the XRP ETF still impact price? Because we know that these ETF issuers, they're going to be acquiring the XRP through OTC desks, right? To create new shares for these ETFs, they create them in big block size, and they have authorized participants who will create 10,000 or 40,000 shares at once, and each share will be backed by 10 to 20 XRP. And so that authorized participant is going to an OTC desk. They're acquiring the XRP, and then they convert it to shares that the company is going to issue. And so this is how the new shares come into creation. Now, many people are concerned because they're thinking, okay, this isn't going to have any impact on XRP price. It's all going to be dark pools, OTC. XRP is not going to do anything. Well, you have to ask the question, if nearly all and the vast majority of inflows into spot Bitcoin ETFs was done OTC, why did Bitcoin still go up 220% after its ETFs went live? Why did that happen? Because I asked Grok to verify how much of the inflows into Bitcoin ETFs have been done through OTC desks. The vast majority of inflows into spot ETFs for Bitcoin are used to purchase actual Bitcoin through OTC desks. Confirmed. This is confirmed. Now, I did actually look to see how much of the inflows into the BlackRock IBIT have been in kind, because that's really picked up recently, where people are just taking their Bitcoin in cold storage and then they're giving it to BlackRock, and BlackRock's putting it in their ETF. And that's only been about 5% of the IBIT inflows according to Grok. So what we see here is that most of the inflows into the BlackRock and the other ETFs has been done cash invested into the stock, or the ETF, I should say. Cash to buy the shares, and then the shares are backed by Bitcoin, which has been bought through OTC desks. And like I said, vast majority of the Bitcoin backing these ETFs was acquired through OTC desks. Yet it did not stop Bitcoin from pumping. Bitcoin pumped from 38,000 up to 126,000. That's over 220%. So when I say that, hey, XRP could move 200, 300% here, I'm just looking at what happened for Bitcoin. And I'm staying conservative with what could happen for XRP. And now where this gets even more exciting is considering the fact that during this time that the Bitcoin ETFs have been live, it brought in 62 billion of inflows. But at the same time, there was actually 24 billion of outflows on the centralized exchanges for Bitcoin, meaning that new money was coming in through the ETFs and the old money was saying, thank you for the exit liquidity. We're selling off on the centralized exchanges to the tune of 24 billion. Why does this make me even more excited? Because it tells me that despite all of the XRP being bought through OTC desks, XRP can still appreciate. Despite old OG XRP investors maybe wanting to sell off XRP on the centralized exchanges, we saw that Bitcoin still was able to appreciate over 200%. Despite 24 billion of outflows on centralized exchanges from January 2024 through October 12th, 2025, 24.31 billion. You had 12.91 billion in 2024, 11.4 billion in 2025 up until October 12th. That's a total of 24 billion of outflows. If you watched my multiplier update that we dropped the other day, you saw me cover this data. This is hard data, historical precedent set by Bitcoin. And now we're just looking to see, is the same thing or something similar going to happen for XRP? It's looking like it, right? Despite 24 billion of outflows on centralized exchanges, despite 62 billion of inflows into Bitcoin ETFs being done primarily, almost exclusively through OTC desks, we still saw Bitcoin appreciate 200%. So is XRP going to appreciate 200% or more? I would say that it's very possible. Let me know in the comments down below what you think. If you find value in this video breaking down the difference between dark pools, OTC, private ledgers, will it impact XRP price? The answer is yes, it is. It's just a matter of how much, and are you prepared and positioned with enough of the asset? That's the only question that remains. What we're watching now is over the next year, significant inflows pour into this asset and significant price appreciation is going to follow. Now, if you appreciate our content, like I said, please help us out by liking this video. Please help us out by sharing it out far and wide. And all of our community resources are available at ZachRector.com. Thank you and God bless you all. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.